Hi, we are Group 11. Today we are going to present the ratios of Sampath Bank and Commercial Bank. We will mainly look at the profitability, liquidity and capital ratios of the two banks, and also we will compare and analyze them in our today's presentation. So now I would like to hand over the Sumindri to continue the presentation.
Thank you, Pasindu. Now I explain about the profitability ratio. The profitability ratio in banking is a key metric used to assess a bank's ability to generate profit from its operation. It provides insight into the efficiency and effectiveness of a bank's business model as well as its overall financial health. So there are three main profitability ratio. One of them in net profit margin. Net profit margin is a measure of the difference between in the interest income generated by a bank and the amount of interest paid out to depositors and other creditors relative to the average interest yearly assessed held by the bank. We can calculate in net profit divided by revenue. Other one is return of assets. This ratio measures a bank's ability to generate profit from its assets. It is calculated by dividing the net income of the bank by its average total assets. Last one is return of equity. This ratio measures bank's ability to generate profit from shareholders' equity. It is calculated by dividing the net income by the average shareholders' equity. Thank you. Now I hand over our presentation to Sachini. Continue it.
Thank you, Sumindi. My part is profitability ratio. Company's ability to generate profits relative to its revenue assets, uh, operation efficiency and effectiveness through net profit margin, return on assets, return on equity. When the comparison them between Sampath Bank and Commercial Bank in the years of 2021 to 2022, uh, Sampath Bank has achieved a return on assets in both the 2021 to 2022 years over 1%, and return of equity has not been achieved in both years. When moved to commercial bank, they have not achieved the goal of return on assets of over 2%, and also the goal of return on equity at over 20%. And growth in profit had been achieved in 2021 over 20%. So thank you. My part is over. I would like to hand over to my uh, presentation to Hashini.
Thank you, Sachini. Now we continue our presentation. Capital ratio. The capital ratio is the percentage of bank capital its risk-weighted assets. First, we can discuss how we calculate the capital ratio. Capital ratio is the calculated by dividing bank capital by risk-weighted assets. Then we can calculate CET capital divided by risk-weighted assets. Capital and additional Tier O and 2 capital risk-weighted assets are the total assets of the bank, adjusted for credit market and operational risks. Then second one is the leverage ratio. We can calculate leverage ratio. Leverage ratio equal capital measures divided by exposure measures. To capital measure, we can get tier 1 capital N. Exposure measure is on balance sheet, exposed balance sheet exposure. This is the end of this slide. I want to invite Transit to continue our presentation. Thank you so much.
Thank you, Hashini. Next, we move into the capital ratio for Sampath Bank and Commercial Bank. Firstly, we discuss Sampath Bank capital ratio. The Sampath Bank 2021 common equity tier 1 is 13.95 and 2022 11.92. Total tier 1 2021 13.95 and 2022 11.92. Total capital 2021 17.02 and 2022 14.27. Then Sampath Bank leverage ratio are 2021 7.80 and 2022 7. Next, Commercial Bank 2021 Common Equity Tier 1 11.92 and 2022 11.39. Total Tier 1 2021 11.92 and 2022 11.39. Total Capital 2021 15.65 and 2022 14.66. Leverage ratio are 2021 5.29 and 2022 5.56. Then 2022 Common Equity Tier 1 Sampath Bank are 11.92 and Commercial Bank 11.39. Sampath Bank has a stronger capital base to absorb potential losses. 2022 total Tier 1 capital is Sampath Bank has 11.92 and Commercial Bank 11.39. Sampath Bank has higher proportion of high quality capital in their overall capital structure. 2022 total capital is Sampath Bank 14.27 and Commercial Bank 14.66. Commercial Bank has a more device capital structure which could enhance its stability and risk absorption capacity. The leverage ratio for 2022 Sampath Bank 7 and Commercial Bank is 5.56. Sampath Bank is stronger capital base in relation to its total exposure. Next, I would like to invite Prasad to continue our presentation.
Thank you. Liquidity ratios are essential for companies to maintain in order to ensure their financial stability. These ratios measure how easily a company can convert its essentials into the cash to cover its liabilities. Two important liquidity ratios are in the liquidity coverage ratio and the net stable funding ratio. The liquidity coverage ratio measures a company's ability to withstand a 30 days liquidity stress scenario. The net stable funding ratio measures a company's ability to maintain a stable funding structure. Companies with a strong liquidity ratio are more likely to be able to pay their bills on time and avoid financial distress. End of my part. Thank you.
Hi everyone, as we mentioned liquidity ratio above, we have an introduction. Now we will looking at the liquidity ratio of Sampath Bank and Commercial Bank. So when we looking at the liquidity coverage ratio in 2022, it was all in rupees 200.78. In 2021, it is 259.89. So when we looking at the percentage change, it was minus 20.2%. And liquidity coverage ratio in all currencies in 2021, 213.43 and 2022 148.53. So again what happened is this liquidity coverage ratio changed, that it declined, that is minus 31.3%. Then when we looking at the net stable funding ratio in 2021, it was 149.92. In 2022 157.10. So there is a increase in the net stable funding ratio, that is 4.8%. And the same thing when we looking at Commercial Bank in 2022 405.91 and 2021 it's 425 in rupees. So there is a minus 20.06 change. And then we have liquidity ratio in all currencies, that's 2022 it's 293.91. In 2022, it is 242.52, which is a 51.39 increase, and net stable funding ratio is 157.47 in 2021 and 173.53 in 2022. So there is an increase, that is 16.11% compared to 2021. So having said that, I would like to hand over my presentation to Aju.
Hello everyone, now let's compare the financial ratios of Sampath Bank and Commercial Bank based on the provided data. I will analyze each ratio and provide reasons for any differences. The first one is return on average assets. Sampath Bank return on average assets is 1.01% and Commercial Bank return on average assets is 1.05%. The Commercial Bank has a slightly higher return on average assets compared to Sampath Bank. This suggests that the Commercial Bank is more efficient in generating profit from its total assets, indicating better assets utilization. Second ratio is return on average equity. Sampath Bank return on average equity is 10.95% and Commercial Bank return on average equity is 12.46%. The Commercial Bank has a higher return on average equity in generating returns for its shareholders relative to its equity. This could be due to better management of expenses or higher profit margins. And the third one is growth in profit ratio. The Sampath Bank growth in profit ratio is 5.43% and Commercial Bank growth in profit ratio is 2.70. Sampath Bank has positive profit growth while the Commercial Bank shows a negative growth in profit. The positive growth rate suggests that Sampath Bank is expanding its profits, while the negative growth at the Commercial Bank indicates a decline in profit. The Commercial Bank may have faced challenges or incurred losses during the period. Fourth ratio is common equity Taiwan. Sampath Bank common equity Taiwan is 11.92% and Commercial Bank common equity Taiwan is 11.39%. Sampath Bank has a higher capital ratio compared to the commercial bank. This indicates that Sampath Bank has a stronger capital base to absorb potential losses and is better positioned to meet regular requirement. Fifth one is total Tier 1 capital ratio. Sampath Bank total Tier 1 capital ratio is 11.92% and commercial bank total Tier 1 capital is 11.39%. Both banks have the same total Tier 1 capital ratios, indicating the proportions of higher quality capital in their overall capital structure. Next one is total capital ratio. Sampath Bank total capital ratio is 14.27% and commercial bank total capital ratio is 14.66%. The commercial bank has a slightly higher total capital ratio, which includes both Tier 1 and Tier 2 capital. This suggests that the commercial bank has a more diverse capital structure, which could enhance its ability and risk absorption capacity. Seventh one is leverage ratio. Sampath Bank leverage ratio is 7% and commercial bank leverage ratio is 5.56%. Sampath Bank has a higher leverage ratio, indicating a strong capital base in relation to its total exposure. A higher leverage ratio is generally seen as a positive sign of financial strength. Next one, liquidity coverage ratio. Sampath Bank liquidity coverage ratio is 200.78 in rupee and 146.53% in all currency. Commercial bank liquidity coverage ratio is 405.91% in rupee and 293.91% in all currency. Both banks have strong liquidity coverage ratios, indicating their ability to cover short-term liquidity needs. The commercial bank has higher liquidity coverage ratio in both rupee and all currency, indicating a more robust liquidity position. Next one is net stable funding ratio. Sampath Bank net stable funding ratio is 157.1% and commercial bank net stable funding ratio is 173.58%. The commercial bank has higher net stable funding ratio, which suggests that it has a more stable funding structure to support its long-term assets. In summary, the commercial bank has generally exhibits slightly stronger financial ratios in terms of return on average assets and return in average equity, total capital and liquidity, but it faces a decline in profit. Sampath Bank has positive profit growth, a higher return of average assets and a stronger leverage ratio, which indicate better asset utilization and capital efficiency. The choice between the two banks would depend on various factors, including risk tolerances and financial objectives. Thank you.
Thank you, Arjun. Hi everyone, I'm going to present the financial summary comparison of commercial bank for the year 2021 versus 2022. So mainly we would focus in profitability ratio, liquidity ratio and capital adequacy ratio. So first of all, when we look into profitability ratio, what has happened is the return on average assets and return on average equity. So these are few main ratios which affect the profitability has reduced. So which means the ability to generate earnings and ability to generate returns from their equity or from their assets have reduced for this year compared to last year. So this is because of mainly the depreciation of rupees. Rupee value is depreciated in Sri Lanka. So because of that, this has happened, and the bank has also taken steps to solve this issue. They have prioritized the small SME portfolio quality. So and then we have the conventional business model due to macroeconomic and financial instability of the country. When we look into liquidity ratio, there is an overall increase. So liquidity coverage ratio in rupee has reduced, and the reason for it is the decline in foreign reserves or this foreign exchange crisis too. And still, liquidity coverage ratio all currency has increased. Plus, the net stable funding ratio has also increased. So which means there is an overall increase in liquidity. And one of the main reasons they state is the growth of deposits have been is more, or they say outpace growth of loans and advances. So what has happened is they have taken these deposits, invested in government securities, and also generate income from that. So because of this, their liquidity has increased compared to 2021. And another reason is adequate buffer of HQLA. So high quality liquid assets is needed for the measurement of liquidity coverage ratio. So they have adequate buffer of HQLA, and that is one reason. And finally, we have increase in available stable funding. So this is measured in net stable funding ratio, that is available stable funding over required stable funding. So available stable funding has increased, and this is why net stable funding ratio is increased. So when we then move into commercial bank capital adequacy ratio, it has reduced. So the common equity tier 1 is reduced, total tier 1 capital is reduced, and also the total capital ratio is also reduced. So the reason for it is, the main reason not only for commercial bank but overall all the banks, is high level of risk due to the macroeconomic instability in the country. So the frequent changes of international trade regulations, the frequent changes in import and exports, then foreign debt restructuring and the financial crisis, depreciation of rupee. So these reasons, these changes, the continuous regulatory changes without a stability has led to high level of risk. So when risk is high, obviously capital adequacy ratio is low, because as we mentioned in the formula of the ratios, how to measure the ratios, the risk is also involved. And then we have still, they were above, no, when, although the capital adequacy ratio was low, they were able to get it above the minimum requirement level, but still in March 2022, it was below the minimum requirement level. So their main focus was not to increase it compared to previous year, but to maintain the consistency and get it above the minimum requirement level. So what they did was, they issued a debenture worth of 50 billion in August 2022, which included tier 2 capital. So in this way, what happened was tier 2 capital base increased, and they were able to manage the total capital ratio above the minimum requirement level. So this was how they managed this situation. And they have also specifically mentioned about the high level of risk in their annual report too. And the regulatory challenges are also in this, as mentioned in the slide, is not only for capital adequacy ratio, it is common for all other ratios too, the decline or the challenges this bank as well as other banks face too. So having said this, I would like to conclude my presentation. Thank you.
Thank you, Hawa. When we look at the comparison between Sampath Bank 2021 versus 2022, we can see profitability of the bank has reduced compared to the 2021 because of increasing impairment charges and pressure from adverse macroeconomic conditions. Then we move to the next slide. You can see there are also an overall reduction of our liquidity ratios, but net stable funding ratio was increased. That means bank still has long-term funding stability. Reasons for the decrease in liquidity ratios are weak economic activity, rising interest rates, foreign currency liquidity levels dropped significantly, and hyperinflation conditions. Finally, the capital adequacy ratio of the Sampath Bank is also reduced compared to 2021. Decreasing those capital ratios generally indicate that bank's capital position has weakened than previous year. If these ratios fall below regulatory requirements, it may trigger bank's capital adequacy issues because it's very close to the minimum requirements. Reasons for the reducing capital adequacy ratio are higher personnel costs, the combined impact of high inflation, and the higher taxes and the high cost of imports on the back of weak rupees. In summary, the changes in these ratios for Sampath Bank between 2021 and 2022 could be influenced by a variety of factors. So it's important for the bank to closely monitor these ratios to ensure financial stability and compliance with regulations. So now I'll conclude this presentation. Thank you all for listening.